Welcome, everyone, to the Planet MicroCap Showcase Vancouver. I'm your host, Robert Kraft, and thank you all for joining us today. I'd like to introduce our next virtual presentation here at the Planet MicroCap Showcase. It will be done by Brian Freeman. He is the executive chairman at the Real Good Food Company. It's a publicly traded company. The symbol is RGF on NASDAQ. And with that, Brian, take it away.
Hey, thanks, Robert. Thanks for having us here. My name's Brian Freeman, Executive Chairman of Real Good Foods, and I look forward to spending the next 15 or 20 minutes just kind of walking you through our story and where we are in our journey. Before I do, obviously here are the normal disclaimers about forward-looking statements. Please feel free to review those at your leisure. So let's get right into it. Real Good Foods is a highly innovative frozen and now refrigerated food company in the U.S. We're one of the fastest growing brands, and I think that we've gone in a very short amount of time, approximately 5 years, from just an online business with maybe a couple $1 million of revenue to we have guided to $200 million in revenue for this year for 2023. And we think that type of growth is going to continue. And we've actually believed that a logical place for us to land is about $500 million in revenue in the medium term. And the reason why we're so bullish on our growth is really for what the brand stands for and how it resonates with consumers. So let's just start at a very basic level of what Real Good Foods, what our mission is, why we exist, and why so many consumers are relating to our products. And really comes down to 3 pillars to our brand. One is the absence of sugar and carbs, or at least very low in sugar and carbohydrate. It typically will have 1/5 the carbohydrates of a conventional item, and then lots and lots of protein. Perhaps as much as 2 to 3 times as much protein as its conventional counterpart. And then the third pillar is just real ingredients. When you think about other brands that try to be better for you, once you turn the package over and you look at the ingredient statement, sometimes it looks like a science experiment. That's not what we're about at Real Good. We keep it real. And so our ingredient deck, we want the consumers to look at what we're using to make these delicious foods and, be relatable and no different than what they already have in their refrigerator or pantry. And so with those 3 pillars, we're really have experienced explosive growth. And it's because of this high differentiation in the frozen food and refrigerated section. I wanted to call your attention to other brands that market themselves as better for you. As you look on the bottom left, many of those brands that say that they're better for you, when you flip the package over and look at the nutritional fact panel, you'll see that they're loaded with carbohydrates, not a lot of protein. In fact, when you compare it to, say, a Hot Pocket, there's really very little difference between the two. Real Good Foods is really changing that. And it's a big deal. And one of the reasons why we're growing is the consumer need for our products is so great. Here are a few numbers that are pretty staggering. When you consider that 42% of U.S. adults suffer from obesity, over 1/3 of all U.S. adults are either pre-diabetic or have diabetes. So if you have these health conditions, you can't ingest a lot of carbohydrates and sugar. But yet all of our favorite foods, whether it's Mexican food or just basic comfort food, when you walk the frozen food aisle, loaded with carbohydrates, lots of sugar. And so our mission from day one is how do we deliver delicious food, the kinds of foods that we all want to eat, but remove the carbohydrates and sugar and replace it with protein. And so, we're in the initial innings still, but what we're getting is huge traction. And, we'll get into the growth of this business in a little bit later. But, one other thing I wanted to mention, you hear things about vegan or plant-based diet. I mean, a recent Jefferies research report showed that household penetration for plant-based foods has declined to 5%. And you overlay that against the size of, folks who have diabetes. I mean, it's a far larger addressable market. How do we do it? These are hard yards. Making enchiladas with very low carbohydrates, as low as 3 grams of carbohydrates, as an example, is not easy. And we cracked the code, and our products are working. And here's kind of a snapshot of our portfolio. What you'll see here is single serve entrees at the top. And if you compare our enchiladas or our orange chicken, we have a fraction of the carbohydrates and sugar and almost 2x the protein of our counterparts. Same is true of breakfast and in all other. And so our path to growth is, how do we deliver our brand promise in multiple day parts and multiple eating occasions? And if we do that and execute on that, we don't think it's very difficult to get to $500 million in revenue, especially when you consider the size of the overall frozen market is well over $50 billion in revenue annually in the U.S. So, for this year and the next year, it's really, our story is really just about growing our distribution. And what this slide is telling you is we're well on our way to doing that. Huge, huge white space still from a distribution standpoint. And, now that new distribution is coming on, and our velocities are how quickly the product turns on shelf, are typically in the top quartile of the categories we participate in. That's why, we've gone to now where we are guiding to $200 million in revenue this year, and we'll continue to see pretty significant growth next year as well. Velocities, or how fast the product turns, is very important to our retail partners, obviously, and we couldn't be happier with the turns that we see on our products. And in fact, today, Real Good Foods has the #1 highest velocity item of all health and wellness products in frozen today. We, about a year ago, launched a very innovative, high protein, low carbohydrate chicken nuggets and chicken strips. And those items are the highest velocity items of any health and wellness item in frozen today. And we're really pleased with that. And we're actually seeing our velocities continue to grow after being on shelf for over a year now. One of the things that we think is important as a good partner to our retailers is not to just simply take share from others on shelf, but to actually grow the categories. And what this slide's telling you is 64%, or actually 90% of Real Good Foods buyers, of people who bought our breakfast sandwiches, were new to the category over the prior 52 weeks. In case of poultry, frozen poultry, 82% of people who buy our products had not bought frozen poultry in the prior 52 weeks. That means we're growing categories for our retail partners and instead of just simply taking share. And that's why we continue to have permission to grow our distribution in retail. And today, you can find our products in every Kroger, Publix, Walmart, and then regional players like H-E-B, Albertsons, Safeway. You can find our products in most every retailer today. Here's again more about incrementality. This slide's really interesting, and what it's telling you is only 3.5% of those who bought Real Good Foods breaded poultry were households that had bought Tyson the prior 52 weeks. Again, really good metric for our longevity on shelf. And how do we do it? How do we bring new users into the category? We do it through social media. And today, we have the largest social media following of all frozen foods in America. And so, I welcome you to check us out on IG and just see the enthusiasm and engagement and size of following that we have. And then click on another frozen food brand and compare us. And I think you'll see why this tactic is working and is very efficient. Again, we have the second highest household penetration in all of better for you items in frozen. 1 in 12 households purchase our products, and we see that growing. I wouldn't be surprised if we see this go and surpass 10% and potentially get to 12% household penetration in the coming quarters. By the way, why does that matter? It's a leading indicator of future growth. If you're able to capture and get trial out of 1 in 12 US households, to me, that's a great indicator of how big this brand is going to become. Measured channel distribution continues to grow. What's measured channel? That is just your local retailers. You know, we have grown our distribution, as this chart will show you, by over 30% this year. And what's even more important is that the distribution we are getting is more productive. So more dollars per point of distribution is what we're seeing, and why the business is really taking off. Here again is another slide for you to look at your leisure. In the unmeasured channel, you know, the brand is really doing well. We have over 8 items in the unmeasured channel at any one time, rotating through various regions of the country. And we're seeing extremely high velocities on our items, and it's really working. Again, the strategy is multiple day parts and multiple temperature states. So, you know, whether you're buying our breakfast flautas in the freezer section or regular flautas in the refrigerated section, you know, our enchiladas, our bacon wrapped jalapenos, stuffed chicken breasts, and obviously breaded poultry, you know, our chicken strips are really doing well in the unmeasured channel. You know, we one of the things about our industry is the retailers change their shelves once a year, and so we really saw a significant increase in distribution points in this quarter in Q3, and so that's why we have done such a significant step change in our revenue from Q2 to Q3. Let's just keep going forward here. Our manufacturing matrix, I want to touch on this briefly. The good news about Real Good Foods is we built the plant in anticipation for this increased demand and increased revenue. A lot of times with these young companies, you know, you hear, hey, the products have just taken off, but we got to build a plant or we can't fill orders. We did the opposite. We leaned in, we made the investment in building out these plants, and we also, you know, over the prior 3 or 4 quarters have lost money because we built the plants but hadn't filled them up yet. In fact, our utilization rates over the prior, you know, 4 quarters has been below 40%. And so, like with any manufacturing company, once you fill that demand, then all of a sudden you're able to leverage your manufacturing capability and your SG&A. And so that's what we see happening in Q3. You know, our revenue, what we guided on the quarter is, you know, 60 to 65 million in revenue. That's, you know, almost double, or actually it's 70% growth. And what that allows us to do is bring down or actually leverage our fixed overhead costs and increase our plant utilization almost 80%. And so with that, you know, we see Q3 really being an inflection point for the business, where you see a business that we believe could be profitable and cash flow positive. And so as we do that, and we see the same thing occurring in Q4 and beyond, you know, the business really is a different business today than it was even just a quarter ago. Our innovation will continue. You know, we see a big opportunity in global entrees. You'd be surprised if you really looked at how much sugar and carbohydrates are in, as an example, orange chicken. We have cracked the code on that, and you know, we're able to deliver delicious orange chicken and General Tso's with 3 or 4 grams of carbohydrates, as opposed to, you know, maybe 35 grams of carbohydrates, 60 grams of sugar per box. And these items are coming on shelf now, and we really like the velocities that we're seeing with the item. I welcome you to kind of review our financial summary. Also, take a look at the guidance that we provided on a one-time basis for Q3 and Q4. The bottom line and what we're really trying to share with our investors is the business really has changed from Q2 to Q3. And we think that there's still significant opportunity for gross margin expansion. Long-term guidance, which I've talked about before, we think that there's really no reason not to have this brand get to $500,000 in revenue, $500 million in revenue. We would like to see in the long term 35% adjusted gross margins and EBITDA 15%. And look, I mean, when you compare where we see 2023 ending up versus what we guided to back when we went public in November of 2021, you know, the team has really worked hard to get this business to a point where, you know, we're able to grow profitably. So with that, Robert, if you had some questions, I'm happy to review any of this.
Absolutely. So firstly, Brian, thank you so much for your presentation here today. So my first question is, you mentioned that Q3 is really the big inflection point for the company, right? Where after that, that's when you expect to see, you know, the company be cash flow positive. In the recent Q2, you guided that the second half is where you see the transition to positive cash earnings. You know, love to hear your reasonings for why you expect this to be the big inflection point.
Yeah, I mean, it's really simple. It's plant utilization rates, just getting the volume through the plants. And, you know, if you look back at Q2, Q1, look at our adjusted gross margin. What the adjustment in that margin really is plant utilization. And that's why I think adjusted gross margin is interesting, because it tells you the true earnings power of the business. So when you look at an adjusted gross margin in the prior quarters and realize that the adjustments based on plant utilization being less than 40%, and then you overlay that against what we're guiding towards with Q3 and Q4, where revenue is up 70%, and plant utilization is approaching, say, call it, you know, 80%. It's pretty easy to connect those dots and see how the business becomes profitable. And so that's really, it's a really simple story. And you know, then to me, with where the stock's trading at today and at this entry point, I think it's a great opportunity for our investors to get involved.
What? Public company chairmen say they think their stock's done about what?
You've never heard that one before.
Never
right?
heard that one. That's funny. So another question for you have is some drivers for growth of the business. You know, we talked about how you mentioned, you know, you're just answered my question regarding inflection point for Q3. Now I'd love to better understand, you know, at long term, you know, $500 million, we have it on the slide right here. So what would you say are some of the drivers to reach some of the goals that you're projecting?
Yeah, I mean, it all starts with having delicious food that still holds to our brand promise. You know, we cracked the code on chicken nuggets and chicken strips. That's a huge category. I think it's approximately 2.8 to 3 billion in annual revenue, high velocity category. And so we have those items now and growing in distribution, and they're doing extremely well. I mean, we're in one mass retailer and over 4,000 stores. We're averaging over $100 per store per week with those items. And so, you know, and you'll see us just continue to grow distribution with that item. The same is playing out with our global entrees, orange chicken, General Tso's, Korean barbecue. The same is true with single serve entrees. And so with those three platforms, just in the size of the categories that they compete in, Robert, you know, you could see how you could kind of stack up 150 or 200 million per category and get to $500 million of revenue.
Very good. Can you go back a couple slides? I think I wanted to have the products up real quick on the The PF Chang, yeah, everything, yeah, the PF Chang one for the general, because the reason I wanted to ask you to bring that up is because in terms of, I mean, these are all partnerships, right, with various, brands out there that have these types of foods. Can you tell us a little bit about the strategy in terms of, organic, new recipes, new foods that you're making organically from Real Good Foods versus, going outside of Real Good Foods and partnering with, PF Chang's and some of these other brands in, packaging their frozen food ideas?
Yeah, so we look at a PF Chang's. It's I believe it's Conagra. We look at that product. It's doing pretty well. We look in the grocery store. We look at innovation. 185 million in retail. We look at those products and we say, wait a minute, big consumer. Lots of people buying these items, but it's loaded with sugar. I mean, you might as well eat a couple of Snicker bars. And so we, from an innovation standpoint, we say, hey, can we make an item that tastes just as good or better without the sugar and carbohydrates? And if the answer is yes, then we can go to those same retailers and say, hey, we're going to bring someone new to the category. They may have diabetes or, they might be clinically obese. Let's put our product on shelf. We'll bring new users in. And we think that, we can have a pretty meaningful business with with these lines of products. And so that's kind of our strategy. We go and look for successful, high sugar, high carbohydrate areas of the grocery store in the frozen food section. And then we show up on the shelf below or above it or next to it. And it's a really simple strategy, hard to execute because the food's got to deliver. And if we delight people and satisfy their cravings for orange chicken, we know we'll win. And the products are doing extremely well right now.
Awesome. Final question for you. We did a due diligence podcast together last year, long form, where I invite everybody to see that. It was really, really good. You did a great job on that. I think it was about an hour, really dove into the business even further. And I think at the time, I mean, this probably wasn't just for you guys. It's kind of a general problem is the supply chain issues and all that. So love to, since this is the first time we chatted since then, love to hear how the company's overcome all those, or if you're still working through it, but, overcoming or working through some of those supply chain issues that kind of was running rampant in 2022.
Yeah, so supply chain is settled down. Our labor forces want to work and they're showing up every day. But what I will say, Robert, is the companies that got through that period, we're one of them, obviously. We got stronger. I mean, we were forced to really exercise that muscle, and we're a better company for it. It was a horrible, difficult time. Every day things would pop up, but it really got the team coached up and gelled really well. And it's made us a better company. I tell everybody, here I'm at our City of Industry facility right now. Hey, the fact that we got through that, folks, means that we can pretty much handle just about anything. So, but yeah, I mean, the supply chain has settled down and our supplier partners are filling us on time and in full.
Very good. All right. So, Brian, we're there. With that, where can our audience go and find more information to follow the Real Good Food Company?
Yeah, realgoodfoods.com. Please check us out on Instagram. That's a great way to kind of get a feel for those that love our products. You're kind of the first to know about all the new things happening. And then, believe it or not, old school Facebook. We've got a VIP Real Good Foods fam, about 15,000 followers. Check us out there as well and just get a firsthand account of consumers enjoying our products. So with that, thank you for the time, Robert. Appreciate it.
I like that. Facebook is old school now.
Old school, man.
That's great. Brian, thank you so much. Really do appreciate it. Great presentation here today, and I look forward to our next update.
Thank you, sir.